Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Strikes continue. The U.S. attacks Iran for a second straight day. The latest violence casts further doubt on prospects for negotiations between Washington and Tehran. Supply fears return. Oil advances after strikes on Iran fuel market jitters. President Trump says the U.S. may reimpose a Hormuz blockade that only applies to Iran. And Asian stocks wobble. Chip makers are higher as optimism over AI-driven demand rekindles appetite for semiconductor stocks. It's just gone 8 a.m. across the Emirates. I'm Abir Abamar in Dubai. A fluctuation in equities across the world this morning. We're seeing S&P futures fluctuate between gains and losses this morning. But for now, they're 0.1% higher, leading to an open that is possibly in the green for the S&P 500. We're keeping an eye on the return to the AI trade. Investors seem to be returning, albeit with a little bit more caution than previously. Asian equities already trading this morning 0.2% higher now. They were declining earlier in the session. We're keeping an eye out on the Kospi in South Korea. It had entered a bear market yesterday. It was losing earlier in the session, but is now also fluctuating between small gains and losses. SK Hynix, with its listing, those ADRs in the United States tomorrow, was 7 times oversubscribed. So we're keeping an eye out on those individual names in South Korea particularly. But the story for us over the past 3 days in the Middle East has been with oil. Brent crude, 3 straight sessions of gains, 1% higher for Brent this morning, $79 on the barrel. We're edging very close to that $80 mark. Iran strikes again this morning. The U.S. had struck Iran for a second straight day into the overnight. Iran retaliating by attacking countries in the GCC, namely Bahrain and Kuwait. We're keeping an eye out on this developing geopolitical story that seems to have not rattled equity markets as much as one would have thought. And the yield on the 10-year notes in the United States this morning not doing very much, but the Fed minutes yesterday for the June meeting, despite the Fed holding rates, it showed that policymakers seem to have thought that we might be returning to this hawkish tilt in the United States. So we're seeing bonds in Australia and the part of the world that is open this morning rallying. We're keeping an eye out on what Kevin Warsh decides to do for the remainder of the year. We're seeing the return again to the hawkish tilt by the Federal Reserve, and that is a story that we have been keeping an eye on since his chairmanship was announced and into the second half of the year. Now, for the stories that we're seeing in Asian markets this morning, we've got Winnie Su in our Hong Kong studio for us. Winnie, what do you have for us?
Good morning, Abir. As you just mentioned, a very jittery session in Asia today with investors juggling a couple different pieces of information. On one hand, you just mentioned higher oil prices due to the escalating tensions between U.S. and Iran. But on the other hand, still some optimism coming through when it comes to the AI trade. Now, we have MSCI Asia here up just 0.1% after 2 days of declines. And we do see Kospi here pretty much flat. But as you just mentioned, we entered that bear territory just yesterday with stocks down about 20% since its peak just last month. Now, when it comes to Hong Kong shares, in fact, we are seeing a bit more weakness after the gauge having jumped about 3% yesterday. Now, flip aboard, we take a look at the fresh data coming out of China. When it comes to a consumer trend, we are looking at the CPI numbers here up 1%, showing a bit of a deceleration compared to 1.2% in May. Now, the estimation is actually at 1.1%, so it is really coming below estimate, mainly driven by how oil prices have really come down over the past few weeks. Now, when it comes to PPI, meeting expectation up about 4.1% here, but the overall trend really hasn't changed much. It is the story about how consumer demand remains weak and factories continue to struggle to pass down these costs to consumers. Back to you, Abir.
Bloomberg's Winnie Su in Hong Kong. Thank you as always. Now, returning to the geopolitical story, the U.S. military has struck Iran for the second straight day, marking a sharp escalation in violence that casts further doubt on the prospects for negotiations between Washington and Tehran. U.S. Central Command announced the attacks in a social media post, saying that the additional strikes were aimed at preventing Iran from targeting ships in the Strait of Hormuz. It also said the U.S. is holding Iran to account for attacks on commercial shipping in the international waterway. Brent crude prices have rallied for a third day as the latest strike stoked fears the conflict could disrupt supplies. And meanwhile, on the flight back to Washington from the NATO summit in Turkey, President Trump told reporters that Iran wants to reach an agreement. However, he doesn't know if Tehran will honor the deal.
We have many ways we can win, but we've already won militarily. They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal.
Joining me now to discuss the story is Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, we've seen those skirmishes even when the MOU was signed about 3 weeks ago. But is it fair to call these skirmishes, and how serious are those latest escalations?
Yeah, I mean, I think they're still at a I don't know how you describe it, medium level. Maybe that underplays what's going on. What it does appear, at least numerically, is we had 80 strikes from the US on Tuesday night. We had 90 last night. I don't think you can necessarily call that an escalation. So they're sort of trying to keep it steady. And what they're targeting largely is any assets that potentially threaten shipping in Hormuz. On the other side, you've got Iran seemingly mostly targeting Kuwait and Bahrain. Again, that signals that they're not necessarily trying to escalate, which I think would be much wider spread attacks. So read into it what you will, and you've got to be cautious about these things. What can be said, though, is that what has happened in the last couple of days has been very effective from the Iranian point of view of dissuading shipping going through Hormuz. And it is all about Hormuz now. To some extent, the nuclear file has been put to one side. You know, it is the so-called golden weapon, Hormuz. And what we could observe yesterday is that the number of ships going through on that Omani route has basically slowed to a trickle, if not stopped altogether.
And so you mentioned the Strait of Hormuz, and it does look like Iran, over the past couple of weeks at least, has been trying to really show that it's asserting dominance over the Strait of Hormuz, and that this is how it's going to play out going forward. This is the new reality. Just how much would the U.S. let up when it comes to Iran asserting dominance over the waterway?
I mean, look, it's an extremely good question. I'm not sure I have a definitive answer. Clearly, the US is very resistant to it. We've had reporting showing that at least some of the Europeans are maybe gently edging towards saying, OK, maybe there's some fees of some sort, even if it's not a toll. And maybe there's some appetite for that elsewhere as well. And I think it's largely, you know, reality has kicked in that if you want these supply chains to keep going, you're going to have to pay something. Whether it works out that way is a different matter altogether. But Iran is absolutely adamant that it's not going to give up control over Hormuz, right? It's discovered this incredible new point of leverage, which no one expected, right? It was unprecedented, and it's going to hold on to it. I don't know about no matter what, but certainly it's prepared to really escalate things to make sure that it retains control.
Yeah, and meanwhile, we're also keeping an eye out on those attacks in neighboring GCC countries, Kuwait and Bahrain. So a fast-developing situation. Stuart, thank you, as always, for your time. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, the other part of the story is in oil, and oil extended gains as the United States continued to strike targets in Iran for a second day. The escalation of fighting threatens energy supplies through the crucial Strait of Hormuz waterway. For more on this specific story, we're now joined by Stephen Stupczynski, who leads our energy coverage out of Asia. Stephen, what do the markets make of the latest escalation over the past 3 days so far?
You know, clearly there's a bit of worry that this could spiral into something bigger. I think there are fears that you will see a prolonged slowdown in traffic in the Strait of Hormuz. And I think there are real worries as well that you could see now the peace negotiations between the U.S. and Iran really take a step back and potentially be derailed for an extended period of time. This will throttle the amount of oil as well as gas that will come out of the region, tightening supply in the market to a degree and lead to higher prices. But clearly, I mean, you look at where we are right now, around high $70, $80 for Brent. That is not the worst we've seen since the war began, when it's at $120 levels. So while there is this fear and this risk that Hormuz traffic will be disrupted for longer, perhaps a short period, there isn't quite a fear in the market that we're spiraling to the worst that we saw in March, where you would see assets across the region being attacked, and there was a risk of a real, somewhat prolonged period where production could be disabled for months on end.
So, Stephen, you already mentioned that this might disrupt the shipping in the Strait of Hormuz going forward. But only a week ago or so, we were talking about all these big banks coming out with their prospects for an oversupply glut in the market by the end of this year. Where do the latest escalations leave things when it comes to that overabundance of energy supplies?
I think an interesting thing that has happened over the last 3 months is they've really tested how resilient the oil market is without oil and crude from the Strait of Hormuz. I mean, last year, the Strait made up about 20% of global seaborne supply would go through that waterway. But now there are a lot of alternatives that are being worked out. I mean, Saudi Arabia has really ramped up output from the East-West pipeline, able to get more of its oil out of the Persian Gulf into the Red Sea and through the Bab al-Mandeb Strait to customers in Asia. At the same time, ADNOC from the UAE has been able to create a shuttle service to get its oil out of the Persian Gulf to Fujairah and reload shipments and get that to its customers. And even now, Iranian shipments are able to continue to get out despite the strikes and the rising tension. So I think there is a view that the market is able to deal with a closure to an extent. You've seen an interesting rebalancing where Chinese imports dropped pretty significantly in the May-June period, which helped balance the market and allowed for the crude shipments to go to other customers. That has resulted clearly in this sort of glut or oversupply, at least in the near term. And that does provide some cushion, which takes away some of the risk of us rising to the $100 handle for Brent, at least.
All right, Stephen, thank you as always for your time. Stephen Stipczynski, who leads our Asia energy coverage. Now, still ahead, we'll continue the conversation on the energy impact from the latest strikes on Iran and oil flows through Hormuz with Karen Young from Columbia University's Center on Global Energy Policy. But up next, the outlook for the second half of 2026 with Max Kettner from HSBC. This is Bloomberg. Rotation trade is gathering pace in Asia as traders hunt for cheaper ways to play the tech boom. This comes as markets appear largely unfazed by the latest escalations involving the United States and Iran. Joining us now to discuss the latest market moves is Max Kettner, Chief Multi-Asset Strategist at HSBC. Max, good to have you on this morning. You've remained overweight on equities through all these macro or persisting macro themes. Can you walk us through just why exactly that is?
Yeah, good morning, and thanks for having me, Abir. Look, I think one thing that is quite clear is that sentiment and positioning is still actually surprisingly pretty neutral, despite us being still at or close to an all-time high in equities, despite us being so close to cycle tights and credit spreads, whether that's in developed markets or in emerging markets. So actually, sentiment and positioning is not really flashing any kind of warning signal. It's still quite neutral. That is one of the things for us that really makes us question why you would waver from any kind of risk on view. That's number one. Number two is, I think, with the upcoming Q2 reporting season, you guys were just talking about oil. When you strip out the oil effect, when you strip out that increase in some of the commodity prices that we had in the second quarter, and you strip it out from energy and material companies, then actually consensus consensus is looking for a sequential earnings decline now in the second quarter reporting season. So once again, we might look at the headline numbers, but actually consensus expectations for the Q2 reporting season are still, again, just like in Q1, pretty subdued. So I do think that Q2 reporting season can be really the next upside catalyst once again.
And Max, we're in the Middle East, so I have to bring up the geopolitical situation. Now, markets have overlooked the geopolitics over the past, over the past 2 quarters, over the first half of the year. What do you think it would take for a geopolitical escalation to have investors just reassess the market?
I think we're going to have a much bigger escalation, sort of what we've seen around mid-March for risk assets to really show a much stronger reaction. Up until then, it's really the AI story. It's the story of both the high and low frequency data, whether it's on the activity side, on the manufacturing side, new orders from manufacturing picking up, things like consumption data picking up. Look at like retail sales. They've risen from about 6% year-over-year growth to over 10% growth now in the US. The tax refunds in the US, all of these things, they really to trump the geopolitical situation, at least for risk assets. I would say when we look at the fixed income side of things, that's clearly not where the fixed income side of things have really looked through geopolitics. Look at, let's say, the last 4 months. Yeah. You look at things like gilts, like UK gilts, like Eurozone government bonds against treasuries, and you compare that against oil, it's virtually the same line. And we've seen that in the last 3 days again. So I would say, particularly for fixed income, for rates, that is still really the centerpiece, what happens to oil, what happens around the geopolitical side. And there I would say, actually, what does it take for fixed income, for rates not to focus on the geopolitical situation anymore, but actually to start switching back into the underlying growth, the underlying inflation story in H2. Obviously, what's happened now in the last 3 days does not help that at all.
And just returning back to equities, Max, I was taking a look at your notes this morning. You've shifted your position on Eurozone equities to overweight, possibly the first person I've heard say that over the past few months, particularly banks, you mentioned. But why is that?
Yeah, look, I think it is one of the things when we look at Europe, particularly the banks, is one of the things where really what we have seen over the last couple of months was banks. The worst that happened was that earnings estimates were basically coming in flat against the market. They never really underperformed. They were literally just coming in flat against the market. So that was the worst that happened really to earnings estimates for the banks. Now, with that tiny bit of steepening that we had until 2 days ago, that was enough to bring earnings estimates not only up, but up against the market again. So for earnings estimates to outperform once again. That really tells us, if the worst that is happening is that banks earnings estimates will market perform, but with a tiny bit of steepening, you already get that upside. I think that really makes the banks look quite attractive. But even overall, Eurozone equities, I think the base where we start from is very different from the start of this year. Earnings expectations are lower compared to the US. Actually, the weaker euro that we've seen, the stronger dollar, that should really help relative earnings expectations for the Eurozone, very different from what we've seen 12 months ago, where the stronger euro was one of the headwinds for Eurozone equities. But also one of the things is that growth expectations, overall growth expectations for the Eurozone are now much lower compared to the US. So it's really a question of the lower base of expectations where we're starting from now.
All right, Max, we're going to have to leave it there. Max Kettner, Chief Multi-Asset Strategist at HSBC. Now, still ahead, President Donald Trump indicated he could let Turkey have advanced F-35 fighter jets. This is despite Israel opposing the move. That is coming up later. This is Bloomberg. Singapore Singapore's state-owned investor Temasek is ramping up its exposure to artificial intelligence and the Americas. CIO Rohit Sipahimalani told us while segments of the AI trade look frothy, they expect earnings-driven growth to continue near term. Take a listen.
Typically, CapEx-driven growth cycles are very good for earnings because the people who are recipients of that spend, they take 100% of that spend as revenue. The people who are spending, they account only for the depreciation cost right now. So as a whole, it's actually very good for the earnings thing. Now, at some point, this acceleration CapEx cannot continue indefinitely, and that's why you will have cycles. But at least in the near future, we don't see that changing materially. So it's right now, I would say, a very earnings-driven market. There's segments of the market that are frothy. But the segment I mentioned, the hyperscaler, they're trading at about the lowest multiples that you've seen in the last few years.
What's looking frothy?
When you're playing in the frothy areas, A, you've got to be confident that that's an area of hyper growth. But secondly, you've got to be sufficiently diversified in some of these. And that's why we're doing that through the VCs. You know, in the public markets, like I said, I mean, it changes day by day. I mean, the question is, are the, is semiconductors frothy? Now, if you look at NVIDIA, it's trading at 13 times 27 earnings. You know, is that frothy? I mean, I don't think so. But there may be other companies who are. So I think you've got to look at it company by company. And a lot of it actually depends on your assumption.
But traditional benchmarks are no longer relevant right now, right? Because AI is an area that few people really understand.
Yeah, but as I said, if you look at the ecosystem as a whole, it is generating $500 billion of free cash flow. So yes, you can play in areas which are uncertain, but there's enough of the ecosystem that you can invest in, which is still strong cash flow generating, and you can look at it from a traditional metrics.
And when you take a look at the US market, valuations are at record highs, very stretched, driven pretty much by tech and AI. How do you justify mobilizing your capital without, putting yourself at risk if that AI capex bubble were to pop?
So, Surinder, what's interesting is that the entire rise in the market this year, and let's take the US for example, has been all earnings driven. In fact, multiples today are lower than what they were at the beginning of the year. Beginning of the year, they're closer to 22 times. They're probably 20.5 times right now. So actually, multiples have come down. But the US is looking at earnings growth of over 20% this year. It's not just the AI. The S&P equal weight index is expecting earnings to grow at 17% this year. And it's not just the US. Across the world, whether it's the US, Europe, Japan, or EM as a whole, every market is expecting double-digit earnings growth this year and in 27 and in 28.
That was Temasek International CEO Rohit Sipahimalani speaking to Bloomberg's Insight anchor Haslinda Amin. President Trump says he plans to take Syria off the U.S. list of state sponsors of terrorism. He announced the move after meeting Syrian President Ahmed al-Sharia at NATO summit. Syria welcomed the plan, saying it could help revive trade investments and reconstruction. And coming up, as President Trump threatens to reimpose a blockade on Iran, we'll find out what that means for the region with Karen Young of Columbia University. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Strikes continue. The U.S. attacks Iran for a second straight day. The latest violence casts further doubt on prospects for negotiations between Washington and Tehran. Supply fears return. Oil advances after strikes on Iran fuel market jitters. President Trump says the U.S. may reimpose a Hormuz blockade that only applies to Iran. And Asian stocks wobble. Chip makers higher as optimism over AI-driven demand rekindles appetite for semiconductor stocks. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take another quick look at where markets are this morning. Asian equities, that fluctuation, you can see it in real time on the screen. It is moving between, they are moving between losses and gains this morning. But first, with U.S. futures 0.1% higher, pointing to perhaps a positive session in the S&P 500 later today. Generally speaking, equity markets seem to not look through the geopolitical risks that are stemming out of the Middle East. They're not factoring them in. We're seeing green across the screen for the time being. We are returning to see confidence coming back to the AI game. Chip makers across continents are also gaining this morning, or perhaps in the United States will gain later on in the day. In Asia, we're keeping an eye out on the Kospi. It had entered a bear market territory yesterday at the close. 4 sessions of drops, perhaps set for a 4th session of losses later today. But for now, the MSCI Asia Pacific completely flat. We're keeping an eye out on SK Hynix. In particular, its ADR listings in the United States. Tomorrow, the orders did good. What we know is that the orders did good, but we have some other individual stories in Asia that Winnie will talk to us about in just a minute. Our story in the region, Brent crude prices 1% higher, edging very close to the $80 on the barrel mark. But for now, it's at $79 on the barrel. We're keeping an eye out on those tit-for-tat attacks between Iran and the United States. The U.S. this morning continued its 2nd straight day of attacks against Iran and targets in Iran. Over 90 targets is what the U.S. Central Command had said. Iran threatening to strike back and already striking countries in the GCC, namely Kuwait and Bahrain, a fast-developing story that we're keeping an eye out on in the Middle East. And then the yield on the 10-year notes in the United States, 4.577, not doing much today, a slight drop. Yesterday's Fed minutes came out shorter than how they used to come out previously, perhaps leading us to think that the paradigm will shift under the chairmanship of Kevin Warsh. But we're keeping an eye on that hawkish tilt returning to the Federal Reserve. But for what markets in Asia have been doing over the past 30 minutes or so, we're getting a check from Winnie Su in Hong Kong for us. Winnie, what do you have for us?
Yeah, morning, Abir. Very volatile session in Asia today, and we can see that MSCI Asia really swinging between these narrow gains and losses, and in fact now up just 0.1%. And as you mentioned, today's big kind of volatile element here is Kospi, now slightly up, but it was also down earlier today. Well, it did enter that bear territory just yesterday, but today what's playing out interestingly is that we are seeing foreign investors buying while retail investors sell. Now, this is also ahead of that widely watched U.S. listing by SK Hynix, now about 7 times overly subscribed, so lots of attention there. And in terms of the Hang Seng Index, you are seeing a bit more weakness after the gauge having jumped about 3% yesterday. But really, it is all about that oil story as well. As you flip the board and take a look at how that's impacting our sectors here, specifically, while everything else looks a bit more uncertain, we do see the energy sector here in Asia leading gains. In fact, is the top performing sector, and Australia's Woodside Energy as well as Japan's Impex also rising further. Now, that really is the higher risk of potential supply disruption in the Middle East, and that's driving the sector further up.
All right, Winnie Su in Hong Kong keeping an eye out on all those market moves. Now, Turkey is looking to secure the delivery of 6 F-35 jets from the United States in an initial transaction. It comes after President Donald Trump indicated he's ready to reverse a ban on Ankara buying the advanced planes. Bloomberg's Dan Williams joins us now from Jerusalem for a perspective on Israel in all of this. Dan, the possibility of Turkey getting those F-35 really troubles Israel. What is Prime Minister Netanyahu's government doing about that?
For now, it's trying to make itself heard above the hubbub, above the pageantry of the NATO summit in Turkey. The Prime Minister of Israel, Netanyahu, is not there. Israel is not a member of NATO, and even if it were, he would probably think twice about sending a delegation at this point in time, given the parlous state of relations between Turkey and Israel. So what we've been hearing from the Israeli Prime Minister is a slew of interviews on American media, apparently aimed at not just American audiences, but American lawmakers, arguing that supplying this advanced aircraft to Turkey would risk the balance of power in the Middle East. That's code for QME, qualitative military edge, which is a term that's been anchored in US law for almost 2 decades now, and practically in US policy for several decades before that, under which any administration undertakes to ensure that Israel has regional superiority in terms of US military technologies it receives. Israel argues that giving this plane to Turkey would potentially disrupt that.
And Dan, Netanyahu also said that he hopes to meet with President Trump at the White House soon. We don't have a date for that yet, that visit. Could this be because of the dispute over the F-35s, or are there other reasons that you're looking out for?
I wouldn't discount that possibility. We've had several days now in which the Israelis have said they expect the prime minister to go to Washington, but they've also said they don't know when. There was expectation it would happen next week. It's hard to plan these things at a few days' notice. There's no question that Netanyahu needs a good photo op with the US president for his electoral prospects. There's an election here in October, but there's also no question that that relationship, while close, while strong, has been tested because of the war in Iran, because of the way it went ultimately, and those two countries were in partnership there. I think they expected a tidy victory within weeks. That didn't happen. It's also possible that practically, now that shooting war has resumed to some degree between the US and Iran in the Gulf, the president is simply too busy to think about arranging such a visit at this time. So we don't know yet, but it would appear that expectations of a visit to Washington by Netanyahu next week are not to happen.
All right, Bloomberg's Dan Williams, thank you, as always. Now, President Trump says the U.S. may reimpose a Strait of Hormuz blockade that only applies to Iran. Trump made the remarks during a bilateral meeting with Ukrainian President Volodymyr Zelensky on the sidelines of the NATO summit in Ankara.
We may put down the blockade. We may put it back, the blockade. And it'll only be a blockade for Iran. Anybody else can have whatever they want. Now, of course, they'll drop some mines if they can, if they can do it.
For more analysis on this story, we're now joined by Karen Young, Senior Research Scholar at Columbia University Center on Global Energy Policy. Karen, a pleasure to have you on this morning. Just starting with the presser that we saw out of NATO yesterday with President Trump and Rutte. From what you heard there, just how likely are we to get back to a state of kinetic warfare, similar to what we've seen in March? So I think we've lost Karen for the time being while we try to maintain that connection. Just a reminder of what President Trump had said yesterday in the presser in Ankara. He was alluding to how the Iranians, the ceasefire between the U.S. and Iran, as far as he's concerned, is over, and that they're scum and that they are liars. These are quotes from the president yesterday in Ankara. We'll talk more about what is happening in NATO, not just when it comes to Iran, but to wider European ties as well. So coming up, President Trump tells NATO allies that troop levels in Europe will depend on how his concerns on Greenland and Iran are addressed. We'll have more on that next. This is Bloomberg. We are now back with Karen Young, Senior Research Scholar at Columbia University Center on Global Energy Policy. Karen, actually good to have you back on with us. The connection was playing out a little bit earlier. And I was asking a question about the presser between President Trump and Rutte yesterday when he was asked about Iran and the ceasefire. And the question was essentially about the return to kinetic warfare, just like what we saw in March. Do you think there's a likelihood of that?
Well, we certainly have seen a return to attacks. Now, is it return to full-scale war? No, I don't think so. There's a limit to President Trump's interest and ability to bring this to a full-scale war. But as we've seen, what the retaliations that CENTCOM is doing over the last 2 days, they're ratcheting up higher and higher, right? So each time the pressure is increasing on Iran, and it's unclear if that will bring Iran back to the negotiating table, which is clearly what President Trump wants to see. But the Iranians have their own ambitions. And one of those ambitions is control over the strait, and they don't seem to want to give it up.
Yeah, exactly. I mean, that was going to be the next question, right? Energy flows, the Strait of Hormuz. It does feel like Iran has woken up to this leverage over the Strait of Hormuz. Maybe they knew about it before, but now they can really just use the Strait of Hormuz as leverage. Do you think that this is going to be the new reality in this part of the world, that Iran will, for now, or for the time being, just take a hold over the waterway, and this is how things are going to be done going forward?
It's definitely what is happening. It is our current reality. And that is a problem. We do have the diversions of the pipelines, but it leaves certain Gulf states at a clear disadvantage in Iraq, in Kuwait, Bahrain, and especially in Qatar. There are no alternatives for export. And Iran knows this and has this leverage. And it's not clear if Iran wants this as a revenue generation scheme, as in a toll booth, or if they want this just simply as political and military power and frankly, an ability to intimidate its neighbors. But it also puts pressure on the United States. And what President Trump is worried about is certainly energy prices, but also the impact on global markets. We've narrowly escaped a calamity, in the president's own words. So will Iran continue to use that leverage? Will we be victim to that every couple of months? It's a possibility.
And speaking of the United States, I mean, you use the word calamity, but do you think that the United States will eventually have to succumb to the fact that Iran has control over the Strait of Hormuz, and also the allies in the region? Do you think that ultimately they're going to have to come to terms with the fact that this is the new reality, this is the new norm?
I think for the Gulf states, we're already in a period of accommodation of Iran. And there are different ways to do that, whether it's commitments of investment or simply reopening diplomatic channels, or allowing Iran to certainly profit from its energy trade, its legitimate energy trade. But the United States is going to be less comfortable with that, and certainly less comfortable with Iran with the control over all kinds of trade, not just energy. So this is setting a precedent for other choke points, which certainly undermine the U.S. position of advocating and securing liberal and open trade systems around the world.
And Karen, just finally on the alternative shipping routes that GCC countries have been using for Saudi Arabia, the Red Sea, for the UAE, doubling down on northern ports like Fujairah, how successful will they be at rerouting completely from the Strait of Hormuz?
All of the volumes that previously went through the Strait of Hormuz. So it will take 18 months to 2 years to construct new pipelines in the UAE and perhaps in Saudi Arabia. But again, that leaves other producers in the region without really any export diversions, particularly in Kuwait and Qatar. Bahrain doesn't really export crude, but it puts them at a disadvantage on trade as well.
All right, Karen, we're going to have to leave it there. Thank you, as always, for your time. Karen Young, Senior Research Scholar at Columbia University's Center on Global Energy Policy. Now, President Trump suggested that future U.S. troop levels in Europe may depend on how allies support his positions regarding Greenland and the conflict with Iran. The comments are likely to intensify NATO's concerns about his security commitments to the alliance. For more, we're now going to Ankara, where our chief Europe correspondent, Oliver Crook, is covering the NATO summit. Ollie, we heard yesterday from President Trump on Iran and the remarks he had made. But on Europe specifically, what more did he and Defense Secretary Pete Hegseth have to say on troop levels?
Yeah, Beer, there was a huge amount of information from President Trump when he came here to Ankara, Turkey, over the last 2 days to kind of unpack all of the sort of significances of the things that he said for American policy across the world. And this sort of issue of American troop placement within Europe has been absolutely fundamental since the beginning of the Trump administration. Obviously, the broader context of whether or not Trump himself and the U.S. under Trump would honor Article 5, that joint mutual defense clause of NATO, the real cornerstone, the holy grail of NATO, has been the sort of quiet thing that has hung over all of these proceedings. But of course, the sort of deterrent factor of American troops, or about 80,000 troops stationed across the European continent, has been one of these major questions about whether or not that number is going to decrease, and in what ways, and in a sort of what time period. We have had presidents of the United States talk about rethinking the American troop posture for a number of years. This is not just something that Trump has done, but Trump has really been the one who has been effectuating that and talking about it more aggressively. We had that already announcement from the Trump administration that they would withdraw some troops from Germany after the Chancellor of Germany made some disparaging comments about Trump and his activity within Iran. And now Pete Hegseth, the Secretary of War, has launched another review of troop placement within Europe over the last 6 months. But everybody I've spoken to over the NATO summit over the last couple of days, NATO officials who are really in charge of dealing with these sort of troops and replacing them, say that this will all be done in a sort of very coherent way. This will be communicated very well to allies, and that they're prepared to do it. What is interesting, of course, is the fact that Trump is now linking the troop movements out of Europe to whether or not he gets his way on Greenland, to the fact that NATO allies have not been terribly supportive of him on Iran. But it's something we'll be watching very closely over the next couple of weeks and months.
And Ollie, just in that same presser, President Trump had some strong remarks on the NATO alliance in general as well. So do you think that the NATO allies were able to convince him that they're reliable partners despite those differences that he had laid out?
Yeah, I mean, Abir, given the sort of potential for things to go terribly wrong over the last 2 days, I think everybody, especially Secretary General of NATO, Mark Rutte, really breathed a great sigh of relief by the end of this summit. I think it was quite a big success for NATO allies. It came in, President Trump came in pretty hot, pretty upset about Greenland, pretty upset about Iran, pretty upset about a number of different things. But by the end of the meeting, the word that he used to describe the entire proceedings was unification. He felt that there was a great deal of unity among NATO allies. He said there was a huge amount of love in the room for that meeting, and that he had wished that the media, the cameras had been in there to sort of demonstrate that. So I think for everybody, this was a very sort of successful summit, particularly since Donald Trump came in talking about Greenland, something that, of course, the Europeans wanted to avoid entirely, talking about Iran, something, again, that they didn't want to make the sort of prominent theme here. But, of course, the sort of big news for the Ukrainians in that meeting with Volodymyr Zelensky, the president of Ukraine, and the president of the United States, absolutely massive news for Ukraine, that the United States would allow them to begin producing domestically Patriots, those air defense systems they've been so desperate for, to stop preventing some of these cruise missiles that have been striking Kyiv increasingly because they're completely out of that supply.
All right, Bloomberg's Oliver Crook still covering the NATO summit in Ankara for us. Now, coming up, MTN Group and Telecel Group are preparing to bid for 5G licenses in Ghana, which still lags behind other African countries in terms of coverage. That story is coming up next. This is Bloomberg. MTN and Telecel are preparing to bid for 5G licenses in Ghana. This comes as the government ends the exclusive rights of a state-backed wholesale provider that partnered with Indian billionaire Mukesh Ambani's firm. Our Chief Africa correspondent Jennifer Zapasaja joins us now from Cape Town. Jen, good to have you from Cape Town this morning. What more do we know about this deal?
Yeah, Abir, this is significant for Ghana, which has a pretty ambitious plan to roll out 5G to its 35 million population. So really, as you were just saying there, MTN and Telecel are bidding for this auction after what we did hear from the government earlier this year, which planned to end the exclusive rights of the previous provider. And part of the reason behind this is because some investors had hoped the success that the provider, which you were just just mentioning there is next-gen Infraco and also Radisys, which is a unit of an Ambani-controlled company. They were hoping that some of the success that we had seen in India would be able to be replicated in Ghana. Unfortunately, that didn't necessarily pan out. We did see NGIC agreeing to pay $124 million in 2024 for this exclusive 10-year license. But at this point, Bloomberg reporting suggests that we've only seen about 49 sites that are actually operational. And so really what we're hearing from the government is that they want to see more bidders come in and just expedite the process.
And Jen, how does this all fit into the broader 5G rollout on the continent?
Well, I mentioned Ghana has an ambitious plan. They're looking to have 70% of their population by 2030 with 5G. Right now, it's still under 10%. And when you compare that to some of the other countries that we are seeing, Ghana still has quite a bit of catch up to do. We've actually seen GSMA, who's noted that Kenya, Nigeria, and South Africa have been able to expand 5G services over the past couple of years. Kenya has about 38% of their population covered by 5G compared to 22% in Nigeria and 60% in South Africa. So for Ghana, if they want to reach 7% by the end of this year, that pales in comparison to what we're seeing in other countries. But GSMA, which is this intelligence provider, or it's an intelligence company that provides some insights into what this could look like for expansion in the African region, we could see over $20 billion added to the African economy if, in fact, we do see 5G rolled out in more and more countries. So still quite a bit of ways to go for Ghana and for the region more broadly to get caught up with the rest of the world.
All right. Jennifer Zapasadra, our Chief Africa Correspondent in Cape Town. That is it for Horizons Middle East and Africa today. I'm Abir Abamar in Dubai. Stay around for Daybreak Europe. This is Bloomberg.